Welcome back to Tech Horizons. I'm Alex.
And I'm Priya. Hope everyone had a restful holiday, unless you were watching servers or checking deal pages at 3 a.m., in which case, same.
First up, the AI boom of 2025 has been a headline grabber. Reports say roughly $500 billion was added to U.S. tech billionaires' net worth this year. More than 50 new AI billionaires emerged, and names like Elon Musk stayed on top, while Jensen Huang from NVIDIA climbed fast.
It's been a fireworks display on equity charts. Startups, incubators, and even Y Combinator founders rolled the AI narrative to big seat rounds. Pitch decks promising model-driven products open wallets quickly.
That sounds great for founders and VCs, but I read lenders are getting cold feet. What's behind that shift to cautious debt markets?
Two big things. First, credit investors are increasingly worried about the pace of growth versus the revenue justifying large leveraged expansions. Lenders are responding by charging higher interest rates and tighter covenants. Second, there's geopolitical and regulatory uncertainty. Yet, ironically, profit incentives often outpace those concerns, so companies kept raising equity while taking on debt at steeper terms when needed.
So equity investors were chasing upside, but debt providers demanded more protection. Does that change how startups should think about scaling?
Absolutely. Startups need to be more capital efficient and prioritize durable business models. If you're thinking in terms of runway, focus on product market fit and predictable revenue before layering on expensive debt. And founders should expect detailed stress tests from lenders, higher rates, stricter reporting, sometimes limitations on hiring or M&A.
Any sign that regulators or policymakers slowed the boom because of geopolitical or societal concerns?
Not really. Analysts pointed out that while warnings were loud about safety, national security, and ethical issues, the financial rewards were strong enough that deployment continued. It created attention, rapid investment, and adoption, but with growing scrutiny and now a more wary debt market.
Quick practical takeaway for listeners, investors, founders, devs.
For investors, be selective and watch leverage. For founders, prefer flexible financing and reserve debt for clear, revenue-backed moves. For engineers and product folks, keep shipping. Responsible, explainability, and compliance matters more now that money flows and regulators pay attention.
Got it. And if you happen to be a billionaire listening, buy a yacht responsibly.
Or at least fund some robust governance frameworks. Moving on.
From billionaires to bargains, Boxing Day sales are live. Laptops, consoles, TVs, and home tech are seeing steep cuts across retailers, from Amazon UK to Best Buy, Currys, John Lewis, and Argos.
If you need a new laptop for uni, work, or sneaky gaming, now's a good window. TechRadar and others flag deals on Apple, Dell, Lenovo, HP, and more. Consoles and games are also discounted. IGN picked a short list of genuinely worthwhile buys.
Quick question. With so many deals, how do you avoid buyer's remorse and spot the real bargains?
3 rules. 1. Compare specs, not just price. CPU, RAM, storage, display, and warranty. 2. Check historical prices. A flashy discount might still be above seasonal lows. Use price trackers. 3. Consider long-term value. Buying slightly higher spec can extend useful life. For consoles and games, check bundle value. A discounted console plus a must-have game can be the best play.
Any standout steals people shouldn't sleep on?
Retailers were advertising up to 55% off on TVs and significant cuts on laptops and smartwatches. If you're a student, look at the laptop picks TechRadar curated. If you're into home AV, Best Buy's post-Christmas TV deals are worth browsing. But hurry, these are often limited stock.
So act fast, but do your homework. Also, remember accessory, batteries, and cables. Always more cables.
Always more cables. And if you do buy, check return windows and price match policies. Some stores will refund the difference if a lower price appears soon after.
Final topic. New York passed a law requiring social platforms to show mental health warning labels tied to features that encourage excessive use. Things like infinite scroll, autoplay, algorithmic feeds, and visible like counts.
The idea is to display warnings the first time users interact with those features and periodically after, similar to health warnings on tobacco products, according to state officials. It targets platforms accessed from within New York, and big names like TikTok and apps from Meta are likely in scope.
Does this set a new precedent? How might platforms respond technically and legally?
Technically, it's straightforward to surface warnings based on geolocation and feature triggers. The harder parts are design choices and user experience. Platforms will want to avoid friction while complying. Legally, expect pushback and lobbying. Companies may argue preemption or free speech issues, but states have been proactive on youth protection, and other jurisdictions are watching closely.
Will these warnings actually change behavior, especially among younger users?
There's mixed evidence. Warnings can raise awareness, but real behavior change usually needs more. Friction tools, defaults that limit endless feeds, and parental controls. Still, framing the risk helps public discourse and could push platforms toward design changes, like making feeds less addictive by default.
If I'm building a social product, what should I be doing right now?
Prioritize transparency and protective defaults. Age gates, clear controls to disable autoplay or hide like counts, and meaningful nudges. Also run impact assessments on engagement features and document them. Regulators will appreciate the paper trail.
Final thought before we go?
The tech headlines move fast, from money piling into AI to shoppers hunting deals to new laws shaping how we interact online. If you build or use technology, keep an eye on both the incentives and the guardrails.
That's it for this episode of Tech Horizons. I'm Alex.
I'm Priya. See you next week, maybe with fewer cables and more warnings.